Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to talk about the subject of pinning. So pinning gets discussed a lot around monthly expiration. You can talk about it around the weeklies too, though I tend to try to work it a little bit more around monthly expiration because you just tend to find more activity there and more pressure around general strikes. Now, as we were looking at Apple today, it's been straight up completely. And I think there's a lot to be said for expiration trading and being willing to wait until the end of the week to initiate your positions. So this morning when Apple opened up at 135, we saw the opportunity to start putting on the iron butterfly. Now this is an interesting strategy because the primary aspect of it is having positive theta. So the passing of time is one of the first things that will really benefit us in this type of a trade, and where we really get the crush from is the extrinsic premium of these 135s falling off. So I always like to look at it from the point of view that if we were sitting here just after Friday's close and the market was done for the week and Apple closed at 135.34, well, what would your spread be worth? I think of this in terms of intrinsic value, which would mean the 135 puts fall off entirely, so we collect that premium. Now the short calls would be in the money. The 135s or 34 cents in the money, so we would have to buy those back at that price. You come to your profit target by taking the credit you receive, subtract what you're having to buy that spread back for, and then leave yourself with a fairly healthy profit target. So that is the plan for tomorrow. As far as Apple is concerned, a couple other places that we've been putting these on, one of which was in Goldman Sachs, and they both rely off exactly the same idea. So financials have been very strong, admittedly, but you try to look for these psychological areas. Prices like 250 are a nice round level, and prices will tend to gravitate towards them. I think this is a great way to play this into tomorrow, and if you've been looking for places to put unbalanced flies, and that's a strategy you'd like to work with more, of course, admittedly, fading Goldman's is a little bit of a tough recommendation, but this is at least how I'm looking at it over the long weekend. So I'd like to look at buying an unbalanced fly. I tend to try to do them a little bit wider and keep the contract size down, but if you can initiate that at a credit, that'll be the most beneficial if Goldman Sachs sit here and trades sideways into Friday. If it instead decides to pull back a little bit, you will still make money, and then as always, just make sure you define your risk should it keep pushing higher. So that's how I'm looking at Apple and Goldman Sachs into tomorrow. Another idea for Goldman Sachs out into next week, and I hope you find those helpful in your trading. One last thing I wanted to make sure you guys were aware of. Bruce did the free class on this last night, but if you didn't get to catch that, we do have a recording of it. If you'd like to sign up for the actual trading itself, that will be going on next week, and you'll have a chance to sign up for that after this video. So if these types of expiration and theta positive decay type plays are interesting to you, I think you will very easily step into the topics that Bruce is going to be covering from a weekly perspective, and I'm really looking forward to it myself. So I hope you found it helpful. If there's anything else I can do for you, please let me know. Otherwise, I will see you at the next free video.